All right, today was very interesting. So the markets were weak. In fact, they've sort of reached a double bottom critical phase where they're really ready to flush to the next level lower. So the rally is very much over, in my opinion, if there even was one. The metals were good, so they bounced off that low. The miners were even better. I would say they outperformed the metals, but definitely outperformed the markets. I mean, it's one of the first times in a long time anyway that I've noticed the GDX, the GDXJ really, outperform, stay green, up 1-2% despite the markets being down. So I haven't seen that in a while. That was good to see. So let's take a look at the action. Let's start off by looking at the market. So S&P, you can see this very temporary low here that we put in place on Friday, and today we touched it. We went slightly below it. We also closed nice and red, so weaker than the last time we went there, but double bottom, but ending on a weak note. The Nasdaq, same thing. Okay, let's just get rid of these annotations. You can see where I think everything's going, but I mean, I still think the same. We're going to go lower because look, that was a weaker close than the last time on Friday. So double bottom, but again, very weak. I'm looking for basically a flush, and I would say this trend line is now here. So yeah, also weak, just like the S&P, maybe even weaker. The Dow Jones, which was very weak yesterday, today didn't do so badly. A little doji within the just above the lower trend line, but still, if the other two, if the S&P and the Nasdaq have a red day tomorrow, this thing is going to close below here, and then it's kind of done. You can put a fork in it if it closes below, and today we ventured below. So although it was relatively strong compared to the others, it is not out of the woods. In fact, I think it's going to go back into the woods. The Russell 2000, though, I think wins the show in terms of the stronger of the four indices. So, not incredibly weak, actually, because normally this kind of chart, if I didn't know what it was, I would say, yeah, by the breakout of this descending. But knowing what it is and what it's related to and what will influence it, I just think this will go sideways and fail at the descending and basically go lower, essentially go lower and test this ascending. So I still think everything's going lower. And then, that's just the technicals. If I sort of zoom out and think about the fundamentals, yeah, everything should be way lower to new lows, lower than, where we were down here. So fundamentally, I can't sort of say, oh, the technicals are wrong. We could go higher. I think technically and fundamentally, we're going lower. And I also think any rate increase will surprise to the upside. So I really think on all cylinders, we go down. But I've said that for a while. But in this case, I think we really could actually go much lower. So that's the markets. The VIX, forget it. The VIX should be higher. And I'm not even going to talk about the VIX. It doesn't deserve to be discussed because it's just fully broken, in my opinion. Let's go straight to yields. Again, I think this is the most important story. So the 1 year just hovering at its highs. So we ventured higher, but we didn't sort of close. Well, actually, this was almost the highest close in a while, but it doesn't really matter. The 1 year just keeps going up, keeps going up. The 2 year is the most important one. Look at this. The 2 year, we actually made new highs. We hit 4.9. We never did that before. Okay, we didn't close at 4.9, but the strongest close in a while. I mean, remember this tail over here, we closed way below, and that was a big red day. So this is like shooting star reversal, and that's what happened. This is the opposite. This is close near high of day at the old high. I mean, we're just going up. We're going up. And this is the 2 year. This is the most important one. And this is going to go crack 4.9 and hit 5%. And I think when the 2 year gets close to 5%, I think a lot of powerful people will be watching that and thinking, oh my God, what happens now? Which could in turn send the market flushing lower. We could have like one of those panic drops on a day like that, like a minus 2, 3, 4, 5% day. When was the last time we had one of those? Those COVID days. I remember that sort of minus 8% or something, just ridiculous things. I remember the GDX was down 30% one day. Okay, that's not going to happen. But, I'm talking about a day kind of like that, a circuit breaker day. I don't know if that would even happen if we get the 5%, but I just think we should have more panic, more volatility. So that's the 2 year, very significant. 5 year, just copying, going up. 10 years, same thing. There wasn't much of a handle to this cup. We're just going up, sideways up, staircase up. I think as the 2 year starts to hit the 5% though, you'll see these sort of accelerate, doing a bit of catching up. And 30 year, I'm sure tomorrow or the day after will be closing above this, well, above 4%. That will also be, significant. So US yields going up. Look at the EU yield. Look at that. Just incredible. I think there was was it yesterday or today? I've forgotten, to be honest, but no, yesterday was France and some other country, Italy or something like that, one of the major ones in Europe, coming out with their inflation data, which was horrible. Inflation was higher than expected. That's why we moved up. But to be honest, we were moving up anyway. Technically, it was just an excuse. And then today, I think it was German inflation numbers, horrible once again. Boom, close at high of day. I mean, this thing is just, it should be scaring the absolute, hell out of a lot of powerful people in Europe. So, and this should really influence the US yields, and they probably are. So, okay, the German yield is exactly the same thing as the EU 10-year yield. The French, identical. The Italian, oh, well, you can see we haven't hit new highs, but we're about to break out of this descending. That's 4.8, then we go to 5. And even the British, I don't see any signs of stopping. We're just going to go back and test this. It's a bit like the US 30-year, I would say, actually, that one. So the summary is just yields grinding higher, in some cases making big moves, the 2-year, the EU 10-year. So yields up, that story doesn't change. Let's check currencies. Unlike yields, the dollar's taken a bit of a breather. And this is also kind of why I wanted to enter metals. Not only did I see the gold and silver hit really oversold lows technically, but I thought the dollar would sort of go sideways, maybe even drop a little bit before going back up. I thought the same would happen with the yields, but they've actually kept going up. But funnily enough, yields going up has not meant the dollar going up, and it has not really put a lid on the metals going up, but it has sent the markets down. So it's just interesting. I like to take note of these things. I do think the dollar will go back up with yields though, and let's see what happens to metals then. I think metals will find it pretty hard to keep going up. But I've remembered periods where the dollar and gold go up together. And I'm not just talking about a fear day where there's war, but just sort of for several days, maybe even weeks, they were going up together and down together. But yeah, just interesting. The dollar really, minus 0.5% is a little significant. So maybe we just keep venturing sideways. But again, I think we're just going to go, back up. So something like that. It always happens quicker than I draw, but something like whatever. So yeah, I'm not going to look at the different FXs because it's all just translated with the DXY. That's what I think is going to happen. Let's take a look at commodities. Copper. I mean, this is so rare to see. This part of the pattern is fine, going up. Okay, bit of a ceiling. I thought it might come back down. That was nice. Moved up quicker than I thought it would. Fine. And then just a massive drop like this. That's rare to see unless it's due to events or due to the influence of markets, which I think could have been the case. But then an instant reversal, this is rare. You rarely see this technically, like up, then down, lower than it was here without really stopping, and then just immediate, just a strong reversal. So I'm not really following copper, but this is too weird for me. So I wouldn't even trade it. So, and if I was to be forced to trade something like this, well, no, there's no point going through that hypothetical. I just wouldn't be in that position. I just wouldn't trade this because it's a bit strange. So I don't know. I mean, I do think that the dollar will go up and we'll put a bit of a break on this move up. Plus, I think markets are going to keep going down. So I'm kind of inclined to feel like it will go back down again. But to go back down after this is a bit strange too. So I'm just no comment. I don't have to comment. Just interesting. I'll see how that plays out. Natural gas, just more signs that the bottom is in. So very, very impressive, despite what's happening in markets and yields. And I think it's in a world of its own. I really don't even think it would matter much if the dollar went down 1.5% or up 1.5%. I think natural gas just needs to be repriced higher because, it's totally oversold. So I think it will get to 4. I don't know if I can say soon, but in several months, and maybe even start to fill this gap and maybe overshoot. Commodities tend to overshoot, undershoot. So yeah, we could go all the way up to 5, to be honest. So especially with developments in the war start to take the headlines. So no, it's just good to see though, because I really thought this was totally overdone. So it's good to see, what is it, 1, 2, 3, 4, 5, 6 trading days in a row, just green. And still hovering above this resistance. So it's nice. WTI, it's getting really, really tight here. It's going to break out or break down pretty soon. I actually just drew these in just before I started the video. I thought, oh, I haven't seen what's happened to oil in a while. So, I mean, you know, if it breaks out of this, it's really just going to go up here. And then we've got another real line of resistance to trade, you know, whether it's going to find resistance and go back down or break out, that'll be to be seen. But I think these little wedge, this tight line here will play a role. So it'll just be interesting to see which way it breaks out of. I think it's getting very tight and it'll be forced to make a move. And I'm more inclined to think it goes up. I know that it's possible it goes lower and all this, and technically you have to respect that and have a plan if it goes lower, if you're in it. But if I had to trade this, I would buy it, because a bit like natural gas, a bit like commodities in general, I think we're going up overall. So that's oil. Now let's look at gold and silver. Yeah, gold and silver. So obviously tagged 1800, even if it was 1805 for me, it's the exact same thing. And then I thought 1830 would be resistance. Not really. Maybe on Tuesday it was, but nah, it looks like it was the top of this sort of these little candles here. Where am I here? So it acted as resistance for, I'm going to say 1, 2, 3, 4, 5 days. So you got to respect that. And today it also respected that. So around 1845. I mean, I could zoom in and find the exact number, but it's lower than 1850. So I don't know, 1845. I would just say 1844 to make sure you get your sell filled, which is probably where it went today. So let's see. For me, 1844 seems to be resistance. Obviously, the dollar should play a role. And then maybe rates in the markets. You know, if we have a market crash, does everything get sold, including gold, or do people flock to gold? It can be one or the other. And the dollar going up or the dollar going down, how does that affect gold? But again, gold can go with the dollar, especially if it's a very, fear on sort of market day. So I'm just going to sit and observe. I'm in GDX and GDX. Well, I'm in the miners. You know what my miners are. So I did trim a little bit today because I saw this and thought maybe. So I basically sold half of my last tranche. If we go higher, and I'm thinking we could go to the 60s, maybe test 60. I don't think we're going to go higher than that. I'll sell the rest because I bought 2 tranches on the way down. I should talk about this when I'm covering GDX, but let's just say I sold half of my first tranche. If we go higher, I'll sell the second half, and then I've still got 1 tranche that I bought basically when gold's at 1830. And I'll have that still 100% of that first tranche when gold is probably 1860. So it's kind of like a win-win. I'll go through that when I'm looking at GDX and GDXJ. But anyway, the point is gold, nice. It tagged 1800. I think so far 1845 is resistance. 1830 didn't really act as resistance. So, and on the upside above that, probably just for now, I'm going to say 1870. I think it'd be asking a bit too much to try and get to 1880. Silver, good too. So I thought it would be 21, but actually it's 2050. In fact, just below that happened to be support. I would say 2050. And so far, we're trying to rally with gold. The silver resistance is quite hard to call, to be honest. I mean, I could put this in. But same thing. I think 2150 for some reason. I just feel like 2150 would be first resistance. I thought that before drawing this descending. I feel like tomorrow, for example, if we were to make a run, for example, we would actually hit 2150 and it would coincide with the descending. So I'm going to say 2150. And if it takes a bit too long, it'll probably be before 2150. I want to say 2150 for now. And you know what? Just to remind myself, I want to put this little target here. Yeah. Otherwise, if we go high, then I think this is pretty clear. $22, a nice round number. Plus, it was resistance here, you know, several times. So I think that makes sense. So 2150, 22. Keep it simple. Yeah. Now let's look at the miners. Miners, you can see, have actually outperformed the metals. So that's GDX up 2%, GDXJ up 3%, even better. That's a hell of a move, you know. I mean, from the low, I'm very happy about this Friday, Monday stuff, but from the low, we're up, you know, 6-7%. You could say even more if you really exaggerate it, almost 8%. That's kind of what I'm looking for, 5 to 10%. So can we go high? Yes, we can. Let's say gold makes that run to what is it, 1844 again, or maybe even goes higher, then we'll really go higher, or silver goes for 2150 or maybe 22, then where would GDX and GDX go? I think it would go here. So GDX, yes, there is a bit of a gap fill. Or 2911, let's say. I think that was the number that was given to me. But I just feel like it could not reach that gap zone. And what if we just get to this zone here, this 29 zone, and then we retrace? I'm not really willing to risk that 11 cents gap fill. So for me, and I like to sell at sort of odd, weird numbers. There's this ladder theory that I picked up from a trader where basically all markets, in his opinion, were sort of orderly, even in panic crashes, and they all follow this sort of ladder theory. There are certain numbers that get triggered more than others, where there's more of a vacuum and you're more willing to get filled. And basically, the gist of it is that odd numbers like, let's say, 9, 4, 11, these types of numbers get triggered more. So for me, and I'm not willing to sell at 28.99 because I usually do that when I think it's very obvious that we're going to test the full round number like 29. But just to be safe, I would sell 28.89. And I think we would only get there if we're seeing gold maybe even going above 1844, past 1850, get the computers running, the algorithms, just buying that momentum, or maybe even higher, 1860, 1870. But I think that's asking a bit too much. And silver 2150 or 22. So those are the levels. And for GDXJ, by the way, it's over here. So for me, it's 36. So therefore, I'd be selling 35.89. And I'm not trading GDX and GDXJ because I can't actually. In Europe, you're not even allowed to trade US ETFs. But I would be watching GDX, GDXJ, and then just dropping in my sell, my limit sell for the miners that I do own, like these. These are the ones I bought. And actually, just speaking very quickly, look at Discovery, which I bought. I think it was 75 cents. It's quite hard to get the fill here in some of these when they're very illiquid, but 74.88 or something like this. Basically 75 cents bought Discovery, and then here it is all the way. And I sold some of that today. Where was it? 75-ish, let's say, all the way up to 87. I sold around 87, 87.11 or something. 16%. I thought, wait a minute, that's pretty good. Let me just take that. And, that's really one entire level. That's just from this level to that level, done. If we go higher, I'll sell the rest. And then it's just fantastic trade. And then I hold what I held when I was here anyway. So I've been doing this a while. I like to sort of do that, like there's a drop, you buy it, you sell it, and in the end you held what you held here, and you held that and you were happy holding it here for a reason. So you just added a bit of money to your sidelines in the meantime. So I'm not going to go through all my portfolio and what I did because that will just make the video way too long and unattractive. But the point is I did trim. So let me just go to GDX, GDXJ. I trimmed some positions that I bought basically Friday, Monday, let's say, Monday pre-market, sort of around here, let's say. So I sold half of it today. And if we keep going, I'll sell the other half. And the rest that I bought when it was essentially here, 33, 34, which is when gold was at 1830. I will sell when I'm all the way up here. I'll sell that. And then that means if once I sell both tranches 100%, then I just hold what I held when I was up here. And by then, GDX, GDXJ should be trading here. So I'm happy either way. Anyway, I hope that made sense. Otherwise, one day I'll go through it in a lot clearer fashion. Otherwise, let's see what happens tomorrow. I do think we could have a bit further of a push. And if we do, I'll be selling the rest of my first tranche. If we don't, then so be it. I'm happy with what I've got anyway. And let's see what happens. Maybe the markets are flushing, which is also exciting because we get to buy these beautiful miners even cheaper. Okay, otherwise, have a good evening. Thank you.